Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday, the 18th of June 2021, and we're updating our look at gold and silver and market prices since this morning as they've moved down yet again. So let's take that look together. Yes, today is turning out to be quite exciting for some and quite worrying for others, unfortunately. You see, when we produced our video this morning entitled Morning Gold and Silver Update, Gold and Silver Recover a Little, we stated that gold was trading around $1,792 and silver at $26.41. We pointed out that there may be a further dip, but prices may recover slightly but not significantly. Our thoughts generally were that gold and silver would not breach 1800 for gold or 27 for silver, not at the close. And we anticipated that silver would hover around 2650, which was our predicted low for the week. We also highlighted that from the trading price that we quoted, to expect it to go up slightly, fall back, and then recover by the end of the day. Well, that was 4 hours ago. Since then, gold did rise, but only to $1,797. That's some $5 higher than our video this morning, and stayed around the $1,792 for about a good 2 hours, but has since fallen down again, and is currently at $1,774. Silver also rose and peaked after our video at $26.52, 11 cents higher than when we last reported, but has since then fallen as low as $25.96, not quite as low as yesterday's low of $25.79, and is currently trading just above the $26 level at $26.02. I think it's also fair to point out, so that you do not think this is just a gold and silver issue, that platinum is also down these past 24 hours at $1,065, albeit just $22 down on the day, but is down $91 on the week. And palladium is down $251 on the week and is down some $50 on the day, and that's standing at $2,549. Now, US stocks have also fallen, so as the markets are now open, but on average about 1%, but it's still early days yet. And UK and European stocks are down an average of 1.5%. This morning we highlighted that the US dollar spot index was hovering close to but below 92, but now it's firmly above 92 at 92.25. And this explains to some extent the further fall in gold and silver prices. Now, there may be some squaring of positions before markets close today, as it's the end of the week, certainly for precious metals, which may give a little support from current levels. But unfortunately, the technicals are suggesting further falls. You see, the key area we need to watch out for in gold is $1,770. If gold falls below this level and holds, then it will fall further. If, however, it can remain above this level, then on the upside, we need to hope that it can reach and surpass and hold at $1,799 to suggest renewed upward momentum. We would say, frankly, although it's not technically based, 1801, because psychologically that 1800 is an important level. Silver's an interesting situation as it's still being affected as a monetary metal, i.e. the rise in the dollar seriously affecting its price, and the potential gains to be made from an increase in industrial demand as economies now open up is currently really not being considered in our view. As is usually the case, though, we have also to consider the fact that price is determined short term and in large part by the paper markets, which is why one can obtain gold and silver and other precious metals far cheaper via ETFs or companies like Bullion Vault, whom we use as it's registered and protected, where margins are tiny, and so the differences between buying and selling prices are ridiculously low when compared to the physical, where you're paying not only VAT of up to 20% in terms of silver in the UK and Europe, but also huge dealer premiums. Admittedly, it's not as secure or enjoyable as holding the physical, providing you don't get robbed, of course. No one comes knocks you on the head or burgles you while you're out of your house. But if you were considering just topping up because you feel prices are too low, but plan on selling relatively short term, then paper contracts are potentially the way to go. Now, we're not recommending them over the physical, but being realistic, for those who plan to trade short-term, and we are long-term dealers generally ourselves, and by dealers I don't mean we deal in it, I mean in terms of our own personal buying and selling, and if you wish to avoid those hefty premiums, which we certainly do, we have never ever been fans of high premiums, then the paper markets or ETFs are a solution to that, acknowledging the fact that there is some additional risk if something should happen to the organizations or trading exchanges that are offering you that facility. Now, with a company like Bullion Vault, you have, though, the advantage of doing both. You can just paper trade it, essentially, or you can actually purchase it and have it held offshore, thereby avoiding some of the taxes concerned. But then you do have to trust the fact that what they claim they put in safety deposit is actually physically there, and we know there's a huge amount of skepticism about that. We've put a link, though, to Bullion Vault in the description box below in case you wish to review it, and they have offices not just in London, UK, but also overseas, including Switzerland and other key areas. Now, going back to silver, its direction is going to be predicated to what extent it closes this evening. Below $26 could see it migrate quickly towards 25 and then to 24. Closing above 26 could see it resonate back to 26.50 and then trade up to 27.50. There are a couple of technical support and resistance levels between these figures, but not hugely strong in this relatively volatile market at present. Now, please remember, this is based on technical analysis, which is far from flawless. It measures price, rarely takes into account fundamentals. Now, in the crypto market, and we raise this because we know there are lots of people very skeptical of this market, and we think rightly so, in fairness, it is also taking a beating, predicated by the directional movement of Bitcoin. That is, wherever Bitcoin goes, the others tend to follow. Bitcoin is down $900 as we produce this video, or 2.4%, with some other cryptocurrencies in the top 20 by means of market capitalization being down as much as 8%. Part of the reason for this, other than normal falls prior to and during a weekend, and for those looking at cryptos, if you've been doing it for a little while, you'll be aware that generally on weekends prices fall. What we've experienced over the last 2 or 3 weeks, they've fallen on a Saturday and then started to pick up again back on a Sunday, and certainly by the time Monday is reached. But the recent publication by Goldman Sachs of a report entitled Digital Assets, Beauty is Not in the Eye of the Beholder, it has stated that Bitcoin is not a long-term store of value or an investable asset class. And this is something most of our followers also believe. But that is in spite of producing a report on May the 21st entitled Crypto a New Asset Class, stating that it is. So even so-called experts at organizations as experienced, inverted commas, as Goldman Sachs, their experts are split over cryptocurrencies and Bitcoin. Now, tomorrow in our weekly update, which we shall be publishing around midday, GMT+1, we shall look into greater depth as to where we see gold and silver prices heading for the next week or so, and we will have also then had time to digest today's movements, seeing exactly where they end up on this rather exciting for some or worrying day for others. What do you think's going to happen? How are we going to end the day? Please share your thoughts. Do subscribe to our channel. We'd really appreciate a thumbs up. It is the second video on a Friday, which we don't normally do. As we've said in the video this morning, Fridays tend to be more quiet, but with so much going on, that's not the case today. Thank you. Press the bell sign. Look forward to joining you tomorrow. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.